All right, welcome back, everybody. This is my EURUSD 5-minute scalping strategy. It did go through a bit of trial and error, which is why I've been not posting for a couple of weeks. I wanted to get it pretty perfect before I release the video. So I will be discussing rules, how to trade it properly, etc. Everything you need to know to trade this, as I do, I will be discussing. But if you could subscribe and share the video to somebody who might need this strategy, I would be greatly appreciated. So getting into the video, each trial this took, I stopped it at about 8 losses. So that was the rule. Once it reached 8 losses, I wouldn't trade that strategy and I would improve it. Now, there's about 3 trials. First one at winning 27 out of 35 trades at a 77% win rate. The three indicators on that one were Chandler exit, PP signal, and Lux Algo. The problem I had with this strategy was the Chandler exit would get you into trades way later than you should be. So I couldn't do that, especially on the scalping strategy. Second one won 33 out of 40. 33 out of 41 trades, winning 80% of those. Now, the indicators on that one are Lux Algo, Lux Oscillator, the PP signal, and the PP signal 2.0. Now, the current one we are viewing right now, that one runs at a 39 out of 47, or 139 out of 47 trades at an 82% win rate. Now, I did like the way this one traded because a lot of the losses that it did take were around break even. So that was a plus. And then I tested it for about 102 trades and it won 83 out of those at an 81% overall win rate. Now that's pretty good for the scalping strategy. One that takes majority break even losses, especially. That was a really great thing for me. So going into the strategy, why is the Lux Oscillator used if it's not that good? Because in the old strategy, I did use it to enter trades, or in the second trial, I did use it to enter trades. And it keeps you at a lot of big wins. So in this strategy, the Lux Oscillator is only used to manage trends. So it won't be used as an entry. And what I mean by manage trends is we entered here. Well, why did we enter? First off, we entered because it formed over the blue 2.0 line. This blue 2.0 line, this blue and purple one right here. This is used to keep you out of false trades, ones that the other indicators won't keep you out of. It does line up a lot of times for wins, so it's really only used to keep you out of false trades that would end up in a loss. So it just increases the profitability by a pretty good amount just with this indicator, which is why I use a lot of the PP signal things. So it formed over the blue 2.0, and I will be discussing what rules it takes after this. Forms over the blue 2.0. Second comes up the overall trend indicator, the PP signal. Third, we have the Lux trend tracer. So we enter, and then seeing this Lux Oscillator, you can tell that as the trend gets a little bit stronger, it starts to go out a little bit more, and once it starts to slow down, it starts to come back. So once it reaches the oversold or overbought line, we do exit. Now, if you enter a trade on those lines, it doesn't matter. It's not, life or death on that one. But if you do enter before, a lot of times it will indicate that the trend is coming to an end once it hits those. A second way that it will indicate is these lines will get closer and closer. So once it starts getting closer and it even crossed, so about this point right here, you would have gotten out, or right here, whichever one. I would have gotten out right here because it touched this line. So simple as that. Now, what are the rules? Okay, so this strategy is pretty simple in terms of rules. It follows 2. The easiest one is if everything lines up, then we enter. What do I mean by that? You have your buy right here from Lux Oscillator. From Lux Algo. You got your 2.0 line, which is in a buy. You have your trend tracer, which is in a buy. And then you have your overall trend indicator, which is in a buy. That's what I mean by everything lines up. If all of the strategies are providing you with a buy in this case, then we would enter. Now, the second rule piggybacks off of this. It's the 1 candle rule. And the 1 candle rule is only for one specific indicator, and that indicator is the PP signal 2.0. So I'll be taking off this so you won't get confused. Now, that's this blue and purple line here. And the way this works is if it forms a candle after, so in this instance, if this, let's just say this was purple or in a sell, if it doesn't change into a buy at least a candle after, then it's not valid to enter the trade. So a better example would be here. We have this sell signal, and obviously we wouldn't actually trade it because the trend tracer keeps us out of a trade like this. So we have a sell signal here, but we're trying to enter. Why can't we enter? We can't enter because this is still in a buy. So unless this changes on this candlestick right here, which is a candlestick after, we can't enter. So let's just say it did change. If it changed right here, we would enter on this candlestick. But if it changed on a third candle, we wouldn't enter. So that's the candlestick after rule. And this only applies to the PP signal 2.0. Any other indicator doesn't matter. It could form 5 candlesticks after. It's really up to you at that point. But for this indicator, it is specifically recommended that you do the 1 candlestick rule. Now, this strategy is pretty simple. Before I go over the rules, I'll show you just how to trade it. We already went through that one. That was a win. Here, everything lines up. You got the Lux oscillator. The Lux Algo. Overall trend starts here. You got the 2.0, which is perfect. It did go over the 2.0, so that's an entry. And then right here, so we would enter on this candlestick here, and then we just ride it all the way down. Most likely I would have got out here at this support zone, which you can see once I draw this parallel line. So see, connection, I would have got out in this area right here. When you're drawing support and resistance lines, use support and resistance to trade this strategy. Anything else, it won't be too good. Now, you can run it off a risk reward ratio, and if you did that, I would do a 1 to 2, but you would be way more profitable because you'll be way more profitable if you just did support and resistance. And for those people who don't know how to do it, I'll show it at the end of the video. Now, like I said, everything lines up. We enter here. We enter here. Why? Because you got the Lux signal, you got the trend tracer, which is green, you got the overall trend, which is gray, and then it forms over the blue 2.0. So we would have entered here and then exited sometime over here. I'd have to actually do this trade to figure out. But a lot of times you can simply just put on a trailing stop, and that will pretty much take the place of this support and resistance. So if you just want to run a trailing stop instead of using actual support and resistance, you can do that. It works pretty much the same. I'd actually prefer support and resistance on some cases. Now, here's a trade we didn't get in. It did form over the purple 2.0, which would indicate a win if everything else did line up. We have the overall trend, which is still in a buy. So we can't trade this. Trend tracer is still in the green. We can't trade it anyway. So if even one indicator is not in a buy in this case, we can't trade it. We need every single indicator to be in the same position to trade. So wouldn't trade this one, we trade this one, and we would get a good bit of profit. Wouldn't trade this. Why? Because it's a sell signal formed over overall trend. We would enter here and then form it up. Now, it's a pretty simple strategy to run. You can pretty much see, but enter here or on this second candlestick right here, write it down. And a lot of times on big candlesticks right here, I won't even wait. I just exit because my experience with big candlesticks is they're going to come back the other way. So I just try to get out when I can. Wouldn't enter here because it's a buy signal over the sell. We wouldn't take this trade, even though all of the other, things are right. Or wait, we would have took the trade and it would have been a tiny loss. But if you were actually using support and resistance, it wouldn't be a loss. It would still be a win because I form my stop losses a little bit above the recent higher low, and I'll be explaining that at the end of the video also. Now, wouldn't take this one, and for this one, it formed over the purple 2.0, which is great. That means all we're looking for is everything to line up. So formed over the purple 2.0, that's a sell. We're just waiting for other indicators. So we got the red trend tracer, which is a another great thing. And then we have the sell signal and the PP signal, and we enter here and write it down to the support zone. Now, easy. So how do I draw support zones, or how do I take profit, stop loss? Okay, here it is. Now, say we entered here, or entered here for an example. Now, the way that I find support zones is I look at the recent high. Now, if are the support area. Now, if the support area is next to where I entered at, like if it's a little bit too close, I won't use that support zone, because if it's too close, a lot of times it won't, you just don't do it. So I'd go over and find something like this where it's a lot of retests and stuff like that. So I would bring that over here, and then I'd draw a box around here. And the reason I draw a box is because it gives you a general area. And as you can see, if we would have drew the box, it would have got close to the area. The reason you draw a box is because support and resistance isn't a line. It's an area. I'll draw a line just because I can plot it across the whole chart, and it's easier that way. But you don't want to use support and resistance as a line. Use it as an area. So as long as it comes pretty close to that area, exit. Because a lot of times it'll reverse before you even gets to the box. So I just exit a couple pips before the box. Now, stop losses. How do I use them? So your stop losses and take profits will vary per trade. They will be different every trade. They won't be the same. Unless you're using a support zone from last trade, then it won't be the same. Now, the way to do stop losses are we would enter here. So this will be our entry right here. Put our little banner so we can see. Entered here. Cool. Where's our support? Where's our stop loss? So stop losses usually for me is another support zone or the most recent high or low. So for this one, it'll be here. And this will be my stop loss. I don't draw a box around it because I don't want to get stopped out over something stupid, because it will come pretty close to it and test it, but it usually doesn't go over. Now, this would be our stop loss. And like I said, our take profit would be down here based off of the support line. Simple as that. A lot of times it won't even hit or come close to your stop loss. So you really don't have to even worry. I just put my stop loss on just in case, but a majority of the times it doesn't hit it. A lot of times I'll actually exit before it hits it at break even. So that's that. So we got the support, stop loss and take profit. And now the rules are now the settings. I mean, so this is Lux Algo. Get the 3.10 version. So we got signal sensitivity is on 14, and then confirmation signals agility is on 26. I think this is the stock setting, but it was performing really good. I tried it at 30 and I tried it at a few other things, but didn't perform the same. So we have the 2.0. Make sure this is the 2.0 version because you will need this price option right here. Back period is 55. Price is whatever this is. Don't want to try to say it. We got PP signal, slope, directional line. The regular version, the length is 200. I do have the little backgrounds on, and this is just because like it's scalping. I'm trying to get in as quick as possible. So if I can just tell by the background without trying to squint my eyes or whatever, that's better. So that one's at 200. And then if you do want to use the Lux oscillator, it isn't needed, honestly. But if you want to use it just for the extra confirmation when you're trading, I'll be giving you those also. So type is legacy mode. If you put it on anything but legacy mode, it'll look like this. This isn't the correct one. You need legacy because this is like the original one they had when they first started. And that's the only one I'll use. Length is 20, and then the source is PP signal. It's the one in the middle. If you set the strategy up correctly, how I have it exactly set up, it'll be looking exactly like mine's. It's going to be the PP signal in the middle. And it's very important that you pick this specific one because it will change the outcome of what the Lux oscillator will look like. So please make sure it's the middle one and it's the 2.0 version. Confirmation, smoothing, all this stuff. I don't think it matters on the legacy mode, but just in case, there it is. So that's pretty much it for the strategy. It's pretty easy. This is just an upgrade to my previous EURUSD strategy, which this one performs a lot better in terms of losses that it does take, and the losses are pretty much nothing. My EURUSD bot has pretty much been trading. I think my EURUSD bot finally lost a couple days ago, and that was actually my fault. I changed my stop loss from 15 to 10, and I got stopped out at a support zone, which was my fault. So if I would have never changed it, I would have won. That kind of sucks for me to realize that. But like I said, if any questions, all of my contact information will be in the description, Discord, email, or Instagram. If you're trying to get to me the quickest, probably Discord or Instagram, because